What's going on, you guys? My name is Zach Hartley, and in this video we're going to talk about the different platforms that you can use to day trade, swing trade, and invest. I'm going to give you the pros and cons of each of the different options so that hopefully you can make the right decision. And I'm also going to give you a couple of things that you may want to consider before making that decision. Here is everything you need to know. Let's go. Okay, so when it comes to the different types of platforms that you can use, there's basically three different types. The first one is banks, the second one is mobile applications, and number three is a full-on trading brokerage. So what we're gonna do in this video is break down these three different types of platforms and then give you kind of my best recommendation for the company or the platform that I recommend for that types. Now, we're gonna start with banks. So the reason I wanna start with banks is because this is usually where most people start when they say, hey, I wanna go out and buy this stock. The easiest way to get into it is to go to the bank that you have a checking or a savings account with, open a self-directed investment account. You can transfer over $100 and you can make that trade very quickly. That's the advantage of banks, is that they're already connected to your already existing infrastructure, your already existing credit card, checking card, savings card, whatever it may be. And so to use your bank as a trading platform is really good if you want to move money in and out very often. It's really good if you want to make regular contributions. It's really good because it's connected to everything that you have, and therefore you can see everything in one place. You can see your checking, your savings, and the amount of money that you have invested in the market. So for a lot of people just getting started, the bank investment method is really simple. Now, I live in Canada and you can do this with RBC, BMO, Scotiabank, TD. Pretty much anybody, you just go in and say, hey, I want to open a self-directed investing account. It's pretty much the same thing in the US. If you're going with JP Morgan, Bank of America, Wells Fargo, you just go in and you say, hey, I want to open up an investment account and I want to trade my own stocks. They will set everything up for you and you're all good and ready to go. Now, the downside to going through your bank and going with their platform is that they usually have higher commissions. In Canada, it's usually around $10 to buy any shares and to exit any shares. Doesn't matter how many shares it is, but it's usually around $10. Now, the other options that we are going to talk about are much cheaper, and that's usually the main reason that people transition away from a bank. The other reason that people don't like the bank platforms is because they're usually not designed for traders or for investors. They're usually designed for ease of access and kind of as an add-on to the banking business model, but the investing side of it is usually not core to their business model. So it's usually not a great platform. And so you can't do a whole lot of analysis. It's kind of tough to compare companies. And depending on which one you use, usually they're fairly limited in terms of your order types and things of that nature. Now, the second type of platform that you can use to invest in is a mobile application. This includes things like Robinhood, Webull, Wealthsimple, and Flamingo. Those are all mobile applications where you can go in and buy and sell stocks. Now, they're really good because they're fully mobile, meaning you can access it 24/7. You can access your securities. You can buy and sell in the car. You can do it wherever you want from your phone. And the applications are usually super easy to use. They're usually very user-friendly, and they also have very low commissions or almost free commissions depending on what you're trading. Now, you do pay for that. Obviously, you're not paying for it in every transaction, but if you're starting to make a lot of trades on there, what you will find is that your executions on the mobile application compared to, let's say, your bank or a regular trading brokerage will not be as good. That's because they're selling the order flow. Depending on the application that you use, they could be selling the order flow, and therefore your execution might be off by 1, 2, 3 cents, whatever it may be. And so some of these apps have difficulty getting very, very good execution. And so that's one of the downsides to them. The other downside is that they have very limited analysis. Because it's a mobile application, it's designed to be a mobile application, and there's such a small screen, you can't really draw out much technical analysis. It's difficult to compare different stocks, and it can be very limiting if you want to do a whole lot of analysis. You're probably going to need to go to a computer because you won't be able to do it on your phone. The other thing and the other limitation of these mobile applications is that very often they're only limited to the large exchanges, meaning if there's a penny stock that is listed on a small exchange in Canada or the US and isn't listed on the New York Stock Exchange or the NASDAQ, you probably won't be able to trade it from one of these mobile applications. So if you are looking to get into very risky small tech companies or startup companies or exploration companies, you probably won't be able to do it from one of these applications. But these mobile apps are a fantastic option for beginners because they also give you a little bit of information about how to trade, how to get started, and they're a fantastic introduction to the market as long as you manage your risk properly. There's a lot of just horror stories of people that have downloaded these apps, put too much money in, and then taken out leverage or traded options, and things have not ended very well. So be very, very careful before you get into any type of options or leverage or margin. Make sure you understand the risk, because in some of these applications, it's very easy to access those options. And if you don't understand what you're doing, you can lose a lot of money, or you can even owe money very fast. Now, the last option here is brokerages. This is probably going to be best for anybody that wants to do this sort of full time, or really get into it and do some hardcore swing trading or day trading, or just kind of take that next level up from a mobile application. This is going to be great, and it sounds complicated and it sounds like it's only for serious people, but trust me, it can be very, very simple, and you can just ease into it. And this is definitely the best way if you know that you want to be a trader and you're just getting started, but you know this is the path forward for you. I would recommend just going into one of these brokerages. Now, in Canada, I think Questrade is probably the best and the most popular, and that's the one that I personally use. In the United States, I think Thinkorswim is probably the most popular, and if you're interested or you don't like either of those options, Interactive Brokers operates in both countries and is also a fairly popular option. There's tons of different brokerages out there, but these are the three that I recommend, and I've used Questrade and Interactive Brokers. I haven't used Thinkorswim, but I know that most people in the US do. Now, when it comes to these brokerages, the main advantage here is that you can perform full technical and fundamental analysis. I could put up 6 different stock charts right now. I could compare all of the technicals. I can draw on the chart. I can place orders. I can move orders up and down within the chart. I can place 6 different types of orders, and I have full control over my trading, over my charts, and I can basically customize my dashboard to be anything that I want. And so using one of these platforms like Questrade or Interactive Brokers just gives you full control of your trading. It gives you a whole lot more data, a whole lot more ability to analyze different securities, and a whole lot more control over your money. So I really like that. They also have additional data levels. So when somebody sees level 2 data, what they're referring to is traditionally what you see is usually level 1, which is basically just the price and the bid and the ask. And that's almost all the data that you can see about the orders in the system. But with one of these brokerages accounts, you can pay to get level 2 data. And what that will show you is where the orders are stacked up above and below the bid and the ask. So if you can see that somebody is trying to sell 1 million shares at $100 and the price keeps getting rejected at $100, you can understand why the price is getting rejected. And it's because somebody is just sitting there selling off all of their shares at $100. And with level 2, you can sort of start to see that, and you can kind of plan for it and analyze it and start to make some trades based off of that. And so there's a lot more that you can do with the brokerages. They give you a whole lot more information, a whole lot more analysis. The downsides is that you do need a computer, because you're not going to be able to access the full capabilities of the brokerage from any type of mobile device. You will pay commission fees. So on Questrade, I pay about $5 entry and exit, depending on the security. But honestly, it's a whole lot better than the banks, and I do pay more than I would if I was trading with like Wealthsimple or Robinhood. But the analysis, the platform, and everything is so much better that I make more money on it. So it definitely pays for it. Now, you do have to pay a little bit of money depending on the data level that you want. So for instance, that level 2 data that I just described does cost a little bit more money. But if you can make good money on it and you can make some trades and you can scale up over time, usually the fee that they're going to charge you is under $100. And if you're making money over the course of a month, you're doing extremely well, and you should be able to justify that and pay for that. Now, if you are interested in signing up for one of these brokerage accounts, I highly recommend Questrade. That is the platform that I use on a daily basis, and there's a link in the description to this video that will give you $50 in free commission. So you can go in, you can get in and out a couple of different times, you can try it out, and it won't cost you a single thing. I promise you, you'll definitely like it, because it's a platform that I use, and I've tried out a couple. I highly recommend Questrade, and I use it every day. Now, here's one of those things that you may want to consider before you get into trading, and this is called the PDT rule, and it's different if you're based in Canada or if you're based in the USA. So we're going to start with the USA, and the PDT rule stands for Pattern Day Trader Rule. And what this says is that if you have under $25,000 in your margin account, you can only make 3 trades within a 5-day period. So a trade counts as buying and selling. You can only do that 3 times within a 5-day period. if you hold under $25,000 in your account. And that's just the rule, blanket rule for the United States, and it pretty much applies whether you're trading stocks or options or basically any security. Now, there are a couple different ways that you can sort of get around this. One of the ways is by opening multiple different brokerages accounts. So if you had an account with Thinkorswim and an account with Interactive Brokers, then you could do 6 trades within a 5-day trading period. You could also just kind of convert and trade crypto. There's no PDT rule on crypto, and you can get in and out. It also trades 24/7. You could also do some more research because there's a couple different strategies about getting around this, but I don't want to go too deep into that. You just need to be aware of it, and you need to plan for that if you're in the USA and you want to be a day trader. Now, if you're in Canada, the pattern day trader rule does not exist. Canada doesn't have a PDT rule, a pattern day trader rule. It just doesn't exist. However, we do have some rules that are similar to it, and to summarize those rules, basically what you want to do is not have your primary source of income coming from a registered account. So if you are trading, whether it's day trading or swing trading, if you are doing it in a registered account like a TFSA or an RRSP, they do not want that to be your primary source of income. So if you're sitting at home and you have a 100K TFSA account and you're spending most of your day just trading that 100K in and out and you're not paying any tax on it because it's a tax-free savings account, that is the issue that the Canada government is going to come after you for, and you really want to avoid that situation. But with regards to a $25,000 limit, that doesn't exist in Canada. You can basically get in and out as much as you want with as little as you want, as long as you're in a margin account if you live in Canada. Now, if you want to learn more about this and understanding how to read the charts, look at the fundamentals, and analyze a company, then you should definitely consider signing up for my Stock Market Fundamentals course. It is completely free and it's hosted on Skillshare, where you can get access to the 9-hour course that will walk you through step by step everything you need to know to build a strategy and get started. There's over 4,600 students, there's over 250 reviews, and I promise you it'll be the best free resource that you can find online. 80% of the reviews say it exceeded their expectations, and I would love to share it with you. Now, just as a summary, make sure that before you get into any of these platforms, you understand the fees, you understand what your limitations are, and you understand what your end goal is and how you're going to get there. If you need more help on that, please reach out to me. The links are in the description to this video, and I would love to help you out along the way with this journey. Thanks so much for watching this video. Remember to click that like and subscribe button, and we'll talk to you soon. Good luck trading, good luck investing. See you in the next video.